Welcome to the class, everyone. Let me share my screen and let's get started. This class is 3 reasons why the Bitcoin bottom is in, or nearly in, by Bitfolio Academy. As the title suggests, you'll learn 3 reasons why I believe the Bitcoin bottom has already been hit. When did crypto winter start? The beginning of crypto winter is up for debate. Some say it started in 2021. The summer of 2021 was kind of a difficult summer in terms of the price of Bitcoin. Bitcoin was down 56% in just a couple of months. Some people say that that's when crypto winter officially began, is the summer of 2001. And the uptrend, the bounce in price in November that we saw was just a bear market bounce. Well, regardless of whether crypto winter started in 2021 or 2022, by May of 2022, we were down 45% in both Bitcoin and Ethereum. So crypto winter was definitely started, it was pretty cold by May of 2022, put it that way. Crypto winter had definitely begun by then. But on May 8th, 2022, the world witnessed the failure of the Terra Luna blockchain. This was a catastrophic failure. In less than 6 weeks, we saw a total decline. In less than 6 weeks, we saw Bitcoin fall by an additional 45%, and Ethereum fell by 66%. On April the 4th, 1 month prior to the Terra Luna meltdown, the total value locked in DeFi was $166 billion. But then just a couple of months later in June, by June 20th, it was $53 billion. DeFi lost a total of $113 billion in less than 3 months. But the bottom didn't come in June. I thought perhaps that was the bottom, but rather the bottom was reached in November with the fall of Alameda Research and FTX. I'm David Anderson. I'm the founder of Bitfolio Academy Coaching Community. Bitfolio Academy is an education company. I offer courses, I provide educational resources, I even provide private coaching. I have a master's degree from Yale University. I have over 20 years experience working as a software and systems engineer. I've been working full-time in the blockchain industry since 2019. I'm a certified blockchain solution architect, and I'll be leading you through this class. I started my career as a teacher, and then I transitioned into engineering, systems engineering, software engineering. This makes me the best person to teach this class. I started Bitfolio in 2014. I've almost had a decade now of experience trading crypto, mining crypto, and investing in crypto. I'm not a registered financial advisor, and you should do your own research before you make any investments. But I want to share my knowledge with you. I want you to learn about crypto, and I want to help you reach your goals. In this class, I'll be sharing verifiable data points. You don't have to take my word for it. You can look up this stuff that I'm sharing with you. You can check my references. You can verify what I'm teaching. Here are the major components of this class. First, I'll play the devil's advocate. I'll give you some reasons why I believe that we've reached the bottom. Then I'll introduce you to the Bitcoin halving cycle, which occurs about every 4 years. Previous halvings have been correlated with intense boom and bust cycles of the entire crypto ecosystem. And I'll argue that based on the past 3 halvings, we can predict what will happen or when crypto winter will officially end. We can look at a couple of more patterns that will give us even more confidence that we're deeply into crypto winter and crypto spring is pretty much around the corner. Finally, I'll share 2 bonus patterns with you, predictors that the end of crypto winter is near. And for example, we'll look at the number of Bitcoins in the red. In other words, out of all the Bitcoins in existence, how many are held in profit or how many are held at loss? Finally, I'll argue that we're deeply into crypto winter, but no fret, crypto spring is coming soon. Who should take this course? There's no prerequisites for this course. Anybody who's open-minded and eager to learn can take this webinar. So are you ready? Let's dive in. First, I want to play the devil's advocate. No one can predict the future. I don't have a crystal ball, but there's plenty of evidence that crypto winter could last for at least for the next 6 months. So I want to play the devil's advocate for a moment and argue that crypto winter is going to last another 6 months. Bear with me for a minute while I present the alternative point of view. First, the macro story. If we look at the economic macro environment, it's not very favorable for risk assets at the present time. And it doesn't look like, whether it's crypto assets or tech stocks, it doesn't look like it's going to change very quickly. For the next 2 quarters, we're going to probably be deep into recession. The recession started at the beginning of 2022 with 2 consecutive quarters of negative GDP growth. And for many, they think that the recession will continue into 2023. The Fed is certainly not done raising interest rates. A 50 base point hike is expected on December 14th. I'm recording this, by the way, December 4th, 2022. And on December 14th, the Fed is expected to raise interest rates another 50 basis points. And they're certainly not done in December. They're certainly going to be raising rates into 2023 by at least another 50 basis points. So there's going to be some serious headwinds for risk assets like crypto. The correlation to the NASDAQ, crypto has seen a pretty tight correlation with the NASDAQ in the last couple of years, and that correlation will likely continue. And when the stock market bottoms, probably second, third quarter of 2023, I think second quarter, the stock market will bottom. This usually means that crypto is going to bottom also when the stock market bottoms. But then and also things are not going to get better until the Fed stops raising interest rates. In fact, the recession typically doesn't end, and the market usually doesn't bottom out until the Fed starts raising interest rates again, lowering interest rates again, not raising them. The second narrative that we should be concerned about is the crypto story. The crypto story is not looking very good either. Genesis Global Trading is on the brink of bankruptcy. The parent company of Genesis Global Trading is Digital Currency Group, and they're not in very good shape either. Last I read, they had loans of $2 billion, and they were looking for additional investment to prop up the company. So what happens if Genesis and Digital Currency Group go bankrupt? Well, I think that we're going to have a liquidity crisis. Crypto liquidity is going to dry up, and that's when sellers can't find buyers. There's just not enough money in the system because nobody can borrow money from these lenders anymore. They're all bankrupt. And so there's just not a lot of liquidity in the system. This can result in really volatile crypto markets. And in this case, the volatility is probably to the downside. Liquidity crisis can result in sharp drops. And it's likely that, if Genesis goes under, it'll create sort of a domino effect where we'll see more and more crypto companies going under. And the liquidity crunch could continue through the second quarter of 2023. Finally, I've heard people argue that crypto has never experienced the Federal Reserve tightening. And you could argue that this time is different because what's happened in the past, is not an indicator of what will happen in the future, because crypto, because the Fed is tightening now, and crypto has never experienced a Fed tightening environment. So we still have a final capitulation in the future. Many more will go bankrupt as the Fed continues to tighten. A major washout is still coming. Now that I've shared the gloom and doom with you, I think it's time to shift gears now and start talking about crypto spring, because I do believe that crypto spring, despite all these negative doom and gloom scenarios, I do believe that crypto spring is coming soon. I mean, it may be 6 months away, but I think it's more like 6 weeks away, or even 6 days away. I think we're pretty close to crypto spring. As the saying goes, history may not repeat, but it often rhymes. Using technical analysis, we can predict the future based on looking at the past. That's what technical analysis is. You basically forecast the future by discerning patterns in the past. So you look at past markets, the patterns in past markets, and you project that into the future. One pattern that you're probably pretty familiar with is the Bitcoin halving cycle. About every 4 years, the amount of Bitcoin that miners can earn gets cut in half. Let me stop sharing this screen and switch screens for a second. Let me share my other screen. Basically, the Bitcoin halving clock it's 480 days from now is the Bitcoin halving. And, I think you probably know what the Bitcoin halving is, but let me just explain it one more time. The amount that miners get for every block, a Bitcoin block is produced every 10 minutes. And the amount of reward the miners get for mining that block is so it's a certain amount, and that amount drops. So in 2024, miners currently get 6.25 Bitcoin every 10 minutes. But in 2024, March of 2024, that will drop to 3.125 Bitcoin for every block that is mined. It used to be started out at 50 Bitcoins for every block, 25. Then it was cut to 12.5. Then it was cut to 6, and now it's going to be cut to 3. That's pretty significant deflation. And what happens is that as the Bitcoin gets more scarce, there's not as much being produced every 10 minutes. That creates some pricing pressure on prices, because if demand stays the same but supply shrinks, then we're going to see an escalation in price. In the past, Bitcoin halving has produced a boom and bust pattern. It results in a supply squeeze, since only half as much Bitcoin is getting created every 10 minutes. And the supply squeeze typically results in a price increase. So if we take a look at the chart, and bear with me 1 second while I pull up the chart. Here's the Bitcoin weekly chart, and we can see the blue line, the downward blue line, is the Bitcoin halving cycle. And we can see the last 3 halving cycles. We can see that the halving produced quite a lot of upward price momentum. Following each halving cycle, we see a lot of upward pricing pressure. And so what happens is that every halving, we see this upward pricing followed after a year or so by a crash. And then we get another halving. So these are every 4 years. And then again, we see a boom and then a bust, a boom and then a bust. And so this is the boom bust that we experience through Bitcoin halving cycles. Now, one of my one of the charts that I'd like to show you is, well, so a couple of years ago, actually, I think it was 2021, two researchers did some analysis on what are the primary value drivers of leading cryptocurrencies. In other words, what influences the price of the cryptos more than anything else. And in this study, they looked at a lot of things like the number of network addresses. They looked at the number of developers that are working on the blockchain. They looked at social media presence and how much Bitcoin and Ethereum or whatever crypto is being pumped on social media. They looked at a lot of different metrics to determine the value of the network. And for Bitcoin and even for Ethereum, one of the things that they determined was that this 4-year cycle is pretty darn influential for the price of BTC. So one of the things that I want to look at as to why I think that crypto winter is probably just about over is if we look at the bottoms. The bottom in the first cycle happened 420 days prior to the halving cycle. And then the second halving event, the bottom occurred 539 days. And the third halving event, the bottom occurred 518 days. So if we do some simple math, and again, let me share my other screen quickly. We'll go back to this screen. So to see the simple math at the bottom, it's just averaging the first 3 cycles, dividing by 3, and we get 492 days. So the average from the first 3 cycles is 492 days. And if we look at the number of days in the Bitcoin halving cycle, we're right at 480 days. So the Bitcoin halving cycle, the next one is projected to be March 29th, 2024. So we're right at 480 days before the next Bitcoin halving cycle. And again, this is one of the leading indicators. Another indicator that I would like to talk about, it's another pattern. It's called the MVRV ratio. And this study also concluded that for Bitcoin and to some extent for Ethereum and 2 other, the top 3 cryptos, that the 4-year cycle and the MRV ratio proved to be the fundamental drivers of value. And so let me discuss the MVRV. It's market value to realized value ratio. And this is a measure of how valuable the network is. The market value is simply the market cap. It's the last traded price times the total number of coins in circulation. And the realized value is the market value of coins at the time they last moved. So basically, you take a look at when a coin was last bought or sold to get the realized value, and then the market value is just the price, the current price times the number of coins in circulation. And the ratio is when these two depart. So when you get a ratio of less than 1, we see that this is when we're currently in the bear market cycle. When the MVRV ratio is less than 1, that means we're definitely in a bear market, a crypto winter, so to speak. And we see these indicators on this chart. This is a chart from Glassnode, but in 2015, we see that the MVRV was under 1 for about 4 months. And then in 2019, in that crypto winter, we see that it was below 1 for a bit longer. It was below 1 for about 9 months, I think. Let me look at my notes. So according to my notes, and 2012 isn't on here, it isn't on this particular chart, let me again stop sharing my screen and pull up another screen. I'm going back and forth between two screens here. Bear with me. So here's the MVRV ratio on Woobull charts. And we can see here 2012. In 2012, it was below 1 for 3 to 4 months. In 2015, it was below for quite a lot longer, 9 months. The MVRV ratio was under 1. In 2019, it was below 1 for 4 months. And currently, it's been 5 months and counting since it's been below the MVRV ratio. And this is the simple ratio. Somebody did a little modification of it. That's the modification. But basically, it's the same result for MVRV. We can take a look at the realized cap and the market cap and see the difference. We see that the market cap is for Bitcoin is 327 billion at the current time, but the realized cap is 387 billion, and so it's below the ratio of 1 at the current time. It's below 1 for Ethereum, for XRP, for most of the cryptocurrencies. So the MVRV is an indicator of the value of the network, and it's a pretty strong indicator of where we are in terms of what is the fair market value for Bitcoin. And currently, the price is below the fair market value according to the MVRV ratio. A second pattern that I want to talk about is the weekly relative strength index, the RSI. Bitcoin's relative strength index has already reached 24.5 in the last couple of months. And anytime that the RSI is below 30, we see that we're in the midst of crypto winter. Let me go ahead and share my chart with you again. And again, I apologize for having to switch back and forth between these two views, but bear with me. So this is the RSI. The RSI is well below 30 in the first bear market, the first crypto winter. And again, we see it again here. It touched below 30 in this crypto winter. And then in 2018, December 2018, we see it was below 30. And then in June of this year, 2022, we see it below 30. And it's currently at, the RSI is currently 29.82, which is below 30. So this indicates that Bitcoin is oversold, and it indicates that we are in crypto winter. So let me switch back to my slides again. Give me 1 second. So one other pattern that I want to share with you is another, what I call the bonus patterns. I told you that I would give you 3 reasons why I believe that the Bitcoin bottom is in or nearly in. And I gave you the 3 reasons. They are the 4-year cycle and the fact that a certain number of days before the halving event, we get this bottoming of Bitcoin, the Bitcoin price. That's the first pattern. The second pattern is the MVRV ratio. The third pattern is the RSI. Here's the bonus pattern, though. It's the cumulative net realized Bitcoins in profit or loss. This is a chart that's produced by Glassnode, and basically a week after the FTX collapse, the market realized a net loss of $500 and 21,000 Bitcoin. Here's the chart that I'm referring to. And we see that in the previous crypto winters, the 2018, 2019 crypto winter, we see that the majority of the Bitcoins held was held in a loss. We see this in the COVID crash, and we see it in the Luna crash, Terra Luna crash, and in the FTX crash. And currently, most people that hold Bitcoins are holding them in a loss. This particular chart is a 7-day average, so it averages it out a little bit. But anyway, you get the point. The green represents profit, the red represents loss. The coins are currently held at a loss. Another bonus pattern that I want to draw your attention to is the total number of Bitcoin and other crypto assets held on exchanges. But if we look at Bitcoin alone, we see that people aren't transferring their coins to exchanges. The reason why people transfer coins to exchanges is to sell the coins. I mean, why would you transfer coins to an exchange if you didn't want to sell them? What typically people do and institutions do is they transfer coins to an exchange and create a limit order to sell the certain number of Bitcoins when the price reaches a certain level. And they leave them on the exchange in open orders in order to sell them. That's the reason for transferring coins to an exchange. So let's take a look at this chart here. And this is a chart of the Bitcoin exchange balance. And we see the blue line represents the gold line represents the price of Bitcoin, and the blue line represents the amount of Bitcoin on exchanges. And we see that in May of 2018, that's how much Bitcoin we are today. We're down to this May 2018 level. So in the last 4 years, we're currently reaching the amount of Bitcoin on exchanges that we had back in 2018. So we're at pretty historic lows in terms of the amount of Bitcoin on exchanges. So this is another indication that we are at the bottom. So in summary, the 3 reasons why that crypto spring is coming soon. First, the 4-year cycle predicts when crypto winter will end. When did crypto winter begin? I mean, if it began back in the summer of 2021, we've been in crypto winter for quite a long time. If it began in January of 2022, we've been in crypto winter for almost a year. But regardless, the MRV suggests that we are at the bottom. The MVRV, ratio suggests that we are at the bottom. The weekly RSI suggests that we're in deeply bearish territory. And the bonus patterns also suggest that most of the Bitcoins are held at a loss. And the number of coins on exchanges tells us that sellers are getting exhausted. So these are the reasons why I believe that the bottom is either in or nearly in, and we're going to see crypto spring begin very, very soon. That's concluding my presentation. I hope that you enjoyed it. Again, I'm not a fortune teller. I can just look at probabilities, but it looks to me like the probabilities is that Bitcoin is getting ready to reverse, that we're oversold, and that it's going to start going up pretty soon. Thanks for watching. I hope you enjoyed it. All the best.